Have you ever felt lost during a trading day? You're not sure if you should be looking for buy opportunities. Maybe you're not sure if you should be looking for sell opportunities. That usually comes down to not having a clear daily bias. And in this video, I'm going to show you why finding a clear daily bias can help with so many of your trading issues, whether that's over trading, trading hesitation, or whatever else it might be that you're dealing with as a trader. And I'll walk you through the easiest way that you can use day in, day out to find your daily bias so you never run into this issue again. So in this video, we're going to be going back and forth from our footprint charts to our regular charts where we execute all of our trades, and it's just a regular candlestick chart. And this will show the order flow of the market, but I usually start on the order flow, or I start on the footprint charts using a volume profile, and that's how I find these value areas, and that's what we're going to call them. If you don't know how to use a volume profile, check out my last long form video. It'll show you what volume profile is, how to use it, and how to find important levels using the volume profile. This is the price action from all of last week, and these were the levels that were traded. So we're going to start from the beginning. This is what the market was looking like Monday morning. Right off of the bat, my bias is going to be bullish. But why is that? It's very easy to tell. If price is above the value area high, our bias is going to be bullish. If price is below the value area low, our daily bias is going to be bearish. So let's play this through, right? We have these levels in before the week starts. How would this have played out? And we can just go ahead and fast forward on here. You can see we're getting a little bit of a reaction here, starting to get a lot of aggressive buying kicking into the market. Now our bias is going to still be bullish, right? Our bias was bullish from before the market even opened. This let us know that we could be looking for long opportunities before the market even opens. And I'm going to go ahead and let this play out a little bit more. So we shoot straight up to our next value area, which was our value area high. This also happened to be whenever there was the fake news released about the tariff pause, or the potential 90-day tariff pause. That ended up being fake news, and when it was confirmed that it was fake news, the market sold right back off to the downside. But now you might ask, well, Errol, we wicked right above the value area high. Why couldn't I have just gotten long if you're saying our daily bias is bullish if we're above the value area high? And well, two things. Number one, we've been bullish all morning, all day. I mean, we shot 1,500 points to the upside. If you're still looking for longs after we shoot 1,500 points to the upside, I don't know what to tell you, but we wouldn't be as bullish anymore for moving that much to the upside. But also what I want to say is we need to see price acceptance. We need to see price and time acceptance. We need to see price trading outside of our value area high to even confirm we're going to have a bullish daily bias. But this is going to be the simplest way that you can find your daily bias. Now, whenever price is trading within the value area, these tend to be choppy markets. It tends to be a little bit more range bound. So you can have strategies that capitalize on range bound markets. But if you don't, and you're looking for directional opportunities, you want to stay outside of these value areas because you're going to be more likely to get chopped up. So that's number one. Now let's go ahead and continue to play this to see if we have any more examples on finding our bias. And one thing that's cool about using the value areas is your daily bias can change in the same day. Depending on what happens in the market, your bias can absolutely change. As we let this roll on, price now has to make a decision. Are we going to be trading within value, which would be the green area, or are we going to reject the value area low? So again, you can see here, it's not a coincidence, right, that we're getting a lot of rejection. We're getting a lot of selling at that value area low because the market is now trying to shift from an imbalanced market to a balanced market. And we'll have another video where we go over balanced and imbalanced markets and what opportunities we look for. But I just want to show you how price is influenced by these value areas. You're going to see some form of reaction at these value areas. But again, if you're ever unsure in the market and you can't read the bias on the day, don't step into the market. Don't take any trades. Sit on the sidelines until you get more clarity on the market and what it's trying to do. We have to ask ourselves, we got a lot of rejection at that value area low, but now it looks like we're seeing price acceptance inside of the value area. Right here, this is about 10 minutes in the market open. We have to ask ourselves, okay, Errol, you said if we have price acceptance above the value area high, we'll have a bullish bias on the day. Right now, price is above the value area high, so are we going to have a bullish bias right now? Well, we need to see price acceptance and we need to see time acceptance. We're getting a lot of consolidation. We're getting a lot of rejection. This is what we would call a failed auction. Now, if we have a failed auction, we're most likely going to be trading back within the value area, meaning buyers failed to take the price higher, so price is going to trade back within fair value. Fair value is going to be the levels where buyers and sellers agree upon price. So let's see how price played out here. You can see we start to get a lot of selling. A lot of aggressive selling hitting the market. Now we want to ask ourselves, okay, we're coming back down to our value area low. You said if we're uncertain about price within the value area, stay out of it until price comes back outside of the value area. Now we're testing the value area low. So we want to see, would we have a bearish bias if we get price acceptance outside of the value area low? Let's go ahead, fast forward this. You can see for a brief moment, we used the value area low as a form of support, and then it turned into resistance, right? We were using it as a level of support, and then right after that, we broke through our value area and rejected off our value area low. Now, whenever we get the price acceptance outside the value area low, our bias on the day would now be bearish, right? It's a little different from this morning because this is about 10 to 20 minutes after market open, right? You might have had a bull bias or you might have had a bullish bias, but we rejected. That's why we got to pay attention to see how price forms at our value areas, because it's about to make one of two decisions. It's about to make the decision to stay within value, which is our value area, or the market is going to go and seek new value, which would be our next value area. So now that we have confirmation, right, that we have aggressive selling at the value area low, we're getting price acceptance at the value area low, our bias would be bearish here. Again, keep in mind, these levels are in before the week even starts. So this is no hindsight. This is how we would trade it if we were trading in real time right now. So we're going to go ahead and press play, right? Our bear bias would have worked out, right? Now here, again, this is what I'm talking about. Picking up pennies in front of a steamroller. If you're somebody looking for a long, and we clearly have a bearish bias as of right now from what the market is showing us relative to the value areas, why would we be looking for any longs within this vicinity right now? Right? We know how price is going to play out, but why would we be looking for any longs if the market is confirming we're having a bearish bias at the time being? Right? This is picking up pennies in front of a steamroller. You don't want to catch these longs. Who cares if you catch those longs? You're going to get ran over, right? Even if we have a little bit of a pop, what if we make new lows, right? So these are very difficult to trade, very difficult to time, and you're trading against the trend. You're trading against the bias at the time being. So let's go ahead and let this play out. You can see we come here, try to make new lows. We eventually make new lows, and now we're trading back near this next value area where we saw a lot of buying initially come off of it that Monday. And now we're trading into Tuesday. Again, even in a moment like this, I'm not flipping the bias until we at least trade to the value area. So I would still have a bear bias if we did not trade to our value area. Little nugget there. Right now, we traded all the way down to our value area high, which was the bottom value area that we have posted right here. Now, I wouldn't be looking for shorts anymore. Okay, the only way I would be looking for shorts is, I'm going to give you a few seconds. Where else would you be looking for shorts? What would you need to see to start looking for more short opportunities? Because the short opportunity we just watched through together is completely done. Right? We saw the entire move to the downside. We even saw the value area being used as support and then flip to resistance. So what would you need the market to do for you to have a continued bearish bias in terms of looking for trade opportunities? We would need to see price trade within this value area, and then we would need price acceptance underneath the value area low for us to now have a continued bearish bias. Then we would be looking to get short and taking more short opportunities again. But once we go from value area to value area, that entire move is done. That entire bias on that original move is completely over, right? We're not going to start having a bearish bias once we reach our final destination. Now, I'm going to let this play a little bit through again. We can see the buying that occurred on Monday, the aggressive buying was present again a couple days after we saw that on Monday. Now we're getting a lot of volatility here. Keep in mind, we have a lot of random headlines about tariffs and the current administration and whatever is going on. So you always have to be paying attention to that as well. And then I'm going to show you something really cool here now, because I think you get the gist of how to find the bullish bias, how to find the bearish bias. And if you're still watching this far into this video, I want to leave you with this little nugget so that you can start back testing some of these things and testing these. I know you can see this little circle that I have right here, and I'm going to show you why I have that right here. And this ended up being a trade that I took. I'm going to pull up the D bars for this. It's going to be a little bit more advanced, but we'll go into more in-depth videos and we'll get those posted on the channel. One thing I want to show, right? We can see we're breaking out to the upside. This was a trade that I took because I was buying around this region in this value area low, just looking for a simple long. I was looking for a regular long with the value area rotation, right? Maybe to the opposite side of value, That's all I was looking for. I did not expect this news about tariffs to be dropped, but I ended up catching about a 1,200 point move on NASDAQ because I happened to be looking for longs in that moment. But I want to show you something that made me lean long before that news even dropped. Again, I had no idea that news was coming. I can't predict news. I happened to be in a position when that news happened, and I got to take advantage of it. That's all that happened. But something I want to show you is we can see this price action right here. I know we haven't went over delta on this channel, but delta is going to be the difference, or delta is going to be the difference between aggressive buying and aggressive selling in the market. So within each candlestick, we'll have a delta. If we have a delta of positive 500, that just means we had 500 more aggressive buyers than aggressive sellers within that candlestick. So it's not saying we didn't have any aggressive selling. We just had more aggressive buyers. So that's how we read delta. Down here, it puts delta in a visual format for us. If we were to look at delta in a regular format, there's a couple ways we can do that. But one way we can read delta is by the footprint bar statistics. So you can see down here, this second row is going to show delta. Some of them have different numbers, but each candlestick is going to have its own delta. Okay. And these are going to be the D bars, delta bars. It gives us delta in a visual candlestick format. So over here, we're consolidating all day, right? We're making new lows. We're popping back up. We're selling off a little bit, but we're pretty much holding within this region all day. I mean, from about 9:30 o'clock when the market opened up to right here, up until the breakout that happened at about 1 o'clock Eastern, just a little bit after 1 o'clock Eastern. We consolidated all day, but something I find so interesting is, and it's a part of the reason why I went to even look for a long opportunity in the first place. We have consistent selling all day. Not only that, I mean, the selling is pretty aggressive. We're making new lows. We're making lower and lower lows and lower highs on the delta bars or on the delta. And price action is not reflecting the action that we're getting with the aggressive buyers and sellers right now. So this was a little fishy. I'm like, if we're getting aggressive selling all day, what's propping the market up? And it's like potentially passive buyers, right? Or somebody is absorbing all of this aggressive selling in the market, causing the market not to follow the delta. Because typically, if we get a down move in delta, we get a down move in the delta bars. I'm sorry, if we get a down move in price, we get a down move in delta. We get another down move in price, we get another down move in delta, or vice versa. So that usually falls. And because we had an extreme divergence between price and delta, something was fishy here. And on top of that, one of my trade setups was showing around this region. So I was able to catch this move. Again, not because I knew the news was coming, but because I happened to be in a position where my setup showed itself. And the news took me along the ride after I entered that position. So I made a free order flow cheat sheet. So if you want to know and learn the basics, the foundation of order flow footprint charts, how to read them, what they are, auction market theory, what these value areas are and how we use them and why we use them, click the first link down in the description. That's going to take you to the free Discord community where I post these weekly value areas so that you can trade off of them heading into the week so you can have the correct daily bias. And in that free Discord, you'll be able to find that free order flow cheat sheet. And if you have any questions, drop them in the comments and I'll see you guys in the next video. Peace.